As investors continue to be concerned about the return on investment for AI spending, Nvidia's shares are down about 6%. The stock has dropped almost 30% from its peak. Here with our trade is Boris Schlossberg, Managing Director of FX Strategy at BK Asset Management and a contributor to CNBC. Boris, so Nvidia might suffer if customers reduce their demand for, significant investments in AI. I'm not sure what's going on with Blackwell chips and all that, but the price action alone is getting everyone's attention. Here, what are you doing with the stock? I think it's like PTSD for those of us who survived the dot-com era. Is this another Cisco? Not in my opinion. But I still believe AI has a lot of potential, and Nvidia will undoubtedly gain the most from it. Indeed, there is still a lot of demand for the Blackwell chips, and they plan to begin shipping them in the third quarter. It's arguably one of the most alluring chances at the moment, in my opinion, considering all of the upheaval they've experienced and the correction they've already undergone from the highs. Selling options against it and waiting for it to come to you could be one tactic given the volatility. Just to give you an example, the put that is expiring this week will offer you $1, and you can purchase the stock at a price 13% lower than its present value. Therefore, if I were to invest in Nvidia at this time, I would just sell puts and wait for the stock to approach me because, in my opinion, it would still be a very, very strong bet in the long run. Due in significant part to the growing need for artificial intelligence and high-performance computing, Nvidia, a titan in the semiconductor business, has performed exceptionally well in recent years. However, given the market's volatility, the question of whether Nvidia is a dependable safe haven during market downturns emerges. We must examine Nvidia's performance during prior market downturns in order to comprehend its resilience. Let's begin with the financial crisis of 2008. At the time, Nvidia's primary concentration was on gaming graphics processing units. The business did go through a slump, like many others, but what's remarkable is how fast it bounced back. Nvidia showed resilience in the face of severe market-wide declines, indicating its fundamental resilience even during difficult periods. The COVID-19 epidemic precipitated a severe market meltdown in 2020. The circumstances were different this time. In addition to surviving the storm, Nvidia turned out to be a powerful performer. The demand for GPUs increased due to the rise in remote work and the expansion of online gaming during lockdowns, which caused Nvidia's stock price to soar. It was evident that the business was not only robust, but also in a strong position to benefit from the new normal. Our investment committee has people who are moving, or if you want to use the phrase dislocation, adding to or creating new positions yesterday. Now joining us from New Edge is Rob Shine. It's interesting, Rob, because we've talked about not being Nvidia a lot over the past few months. Although you had several tech names, this was the one you didn't own. Tell me why, though, now that you do. Upon reviewing our portfolio, Scott, we discovered that it expressly compares against the Russell 1000 Growth. Additionally, the average stock in the Russell 1000 Growth was up 5% if you look back to the heights. The index was up 21%, while our average stock was up 15%, and the lack of ownership in Nvidia was the reason for this underperformance. Therefore, it calls into question how you're constructing portfolios that are meant to behave in specific ways within client accounts and ensuring that you're not taking on active risk, or what we refer to as tracking error. As a result, we examined our portfolio yesterday after a prolonged period of underweighting the stock. We observed that same-store sales were beginning to drop and that a stock like O'Reilly, which is still a high-quality business, they've delivered good returns, they have a lot of defensive characteristics, was trading at a very high PE in comparison to their history. In order to move into a position similar to Nvidia, we looked to that position. By upgrading quality and taking advantage of a recent valuation reset, we were able to reduce our tech underweight, tracking error, and active risk in our portfolios. Additionally, we thought that a half position made sense because they will be making money in the coming weeks. It should be noted that we did not execute a full position because we continue to believe that there is some short-term risk, whether it be due to the unwind, this interest rate move, or additional jobs data that could frighten markets. We do believe that there may be a chance for you to purchase additional at reduced prices. However, the takeaway for your investors is that you cannot only consider volatility from a macro perspective. You must possess both surgical and micro skills. And I would imagine that we will make several adjustments to all of our portfolios, which comprise 5 distinct techniques, in order to improve the quality as long as this volatility continues. Right now, none of us can tell if this is an unwanted growth scare or a welcome cooling. If the latter, we will have several possibilities. The important thing is to get clients ready to take action. I'd like to share with you another unusual activity we did. We were long duration a month ago. I have never witnessed a move in bonds like the one we've seen lately, and since it's gotten so unappealing, we've closed it out and are currently cutting duration. According to Rick Reeder and all of the committee members, there is a lot to do, and if you're ready for it, volatility can lead to opportunity. Nvidia is well positioned today, supported by a number of factors. First, its supremacy in AI. Nvidia is at the vanguard of the AI revolution thanks to its GPUs, which are now the industry standard for training AI models. One of the main factors influencing AI's long-term growth prospects is its leadership. The data center industry comes next. Demand for Nvidia's high-performance computing solutions is increasing due to the increased reliance on cloud computing, which strengthens the company's position in the market. Not to be overlooked is the automotive industry, where Nvidia's foray into driverless cars offers a huge growth potential and might establish the company as a key force in transportation in the future. But things aren't always easy. One major issue that affects Nvidia's production capacity, and consequently, its profitability, is the continuous shortage of semiconductors. Additionally, the competition is getting more fierce as AMD and Intel compete for a bigger market share. Furthermore, a possible slowdown in the economy as a whole may reduce demand for expensive GPUs, which would introduce even another degree of risk. Right there on your screen is the ticker sign for Nvidia, which is what we're tracking this morning. After leading the Magnificent Seven declines yesterday, Monday, when those equities lost nearly $650 billion due to a sharp global sell-off, the shares are now rising. Due to the stock's erratic performance over the past month, investors are unsure if this is the right time to purchase. Now let's welcome More Insights and Strategies founder and CEO, Patrick Moorhead. Okay, so Patrick, if you haven't already been exposed to Nvidia and aren't currently connected in any way, is this the ideal time to? Listen, investors always have a great chance to profit from massive sell-offs. From a distance, the PE ratio makes sense when you take growth rates into account. Nothing has altered their mid-term competitive standing. In the short term, there is some danger associated with this possible Blackwell push, which is the sequel to their Ace series, but consumers are still purchasing the Ace series. Therefore, I don't see a lot of negative consequences here, especially in terms of short-term danger. Is Nvidia a secure place then? The company's leadership in AI and HPC prepares it for long-term success, and it has undoubtedly demonstrated endurance in previous market dips. However, it is impossible to completely rule out market volatility in the near future. Nvidia is an appealing choice for investors, but it's important to carry out in-depth research, evaluate your own risk tolerance, and make sure your portfolio is diversified. Making wise investing choices will require keeping up with Nvidia's most recent advancements, as well as the state of the market as a whole. The important thing is to approach Nvidia with a balanced viewpoint and a thorough awareness of the dangers and benefits associated, regardless of whether you view it as a safe haven or a high-growth potential. The script's length and meaning have been maintained while all grammatical errors have been fixed.